Good evening, and welcome to today's financial market update. Last night on Wall Street, trading was relatively quiet, with the three major indexes closing nearly flat. The Nasdaq ended at 26,972 points, the S&P 500 at 7,580, and the Dow Jones at 51,032. The market is clearly waiting for this week's key economic data and comments from Federal Reserve officials. However, futures trading before the bell sent a warning signal. The Nasdaq futures dropped 0.4%, pointing to potential pressure on tech and growth stocks today. In contrast, the Dow futures edged up 0.14%, suggesting money is rotating from riskier tech names into defensive and value-oriented sectors. Meanwhile, the VIX, often called the Fear Index, rose to 15.83, marking a single-day gain of over 3%. That's the biggest jump in 2 weeks, indicating that investor sentiment is shifting from greed to caution, though we are not yet in panic territory. On the global macro front, the yield on the 10-year U.S. Treasury note held steady at 4.45%. This high level suggests the market is pushing back expectations for a Fed rate cut, and concerns over tight liquidity remain. The U.S. dollar index is hovering around 99, still in a weak range, which generally supports emerging market assets. But today's slight rebound in the dollar could put some pressure on commodities and risk appetite. WTI crude oil is trading around $89 a barrel, moving in a narrow range as supply cuts from OPEC Plus are balanced by worries over slowing global demand. Gold slipped a bit to $4,527 an ounce, mainly due to the stronger dollar, with some of the safe haven premium fading. Still, the long-term trend for gold remains supported by central bank buying and geopolitical risks. Now let's turn to China's external environment. The onshore and offshore renminbi exchange rates are both near 6.76, with almost no gap between them. That shows market expectations are highly aligned. The renminbi has appreciated about 4% against the dollar this year, putting it in a strong position. This weakens the appeal of dollar-denominated assets and increases the willingness of foreign investors to allocate to renminbi assets. Today, northbound capital flows into shares are likely to be positive, but the money may favor defensive sectors like high-dividend stocks and utilities. We also checked for any major news on tariffs or tech restrictions between the US and China, and found no significant new events today. So the external environment remains stable for now. Looking at the A-share market, we expect a flat open today, but the overall trend could be weak. The Shanghai Composite Index is likely to edge lower, while the Chinex board, which tracks growth stocks, may face more pressure. It already fell over 2% yesterday, and with Nasdaq futures pointing lower, it could drop another 1% or more today. In terms of sectors, utilities and high-dividend stocks are expected to be the main beneficiaries, as the VIX rebound and Nasdaq futures decline trigger a risk-off mode. Money will flow into low-volatility, high-yield names. On the flip side, tech and semiconductor stocks need close attention. The combination of falling Nasdaq futures and high U.S. bond yields is a drag on growth stock valuations. If the rebound fails to gain traction, selling pressure could accelerate. To sum up, the market is shifting into a defensive mode today, with safe haven assets outperforming growth stocks. Our probability assessment is 20% for an up day, 45% for a flat day, and 35% for a down day. Investors should stay cautious and focus on defensive allocations. Thank you for watching, and we'll keep you updated as the day unfolds.